Hello. Wasn't really planning on making a video today, but the timing of this is kind of important, so wanted to go ahead and get this out there. So maybe it could potentially help a few people with some ideas on this situation and the timing. So what we're looking at is the SOXL, ticker symbol SOXL. It's the Direxion Daily Semiconductor Bull, 3 times leverage ETF. And what we're looking at here is ETF. This thing's been beaten down really bad since December. With the rest of the market, everything's been down pretty severely, and looks like it may have put in a bottom here around October. This looks like a pretty nice exhaustion day right here. Maybe we'll go over that later in another video, what that's all about. But what I have here is I have the 200-day and the 50-day moving averages, which I don't put a whole lot of I'm not a strict follower of moving averages, but it can give you some ideas of long-term situation with a stock. Actually, if I move it back, I can get a better. There you go. We fully accounted for all the days. But as you can see, the price has been since October. It's been moving up. It looks like it's changed direction. It's gotten above the 50-day and kind of stayed above the 50-day, and the 50-day is turned up. So any of you that aren't familiar with moving averages, it just averages the price of the ETF over the past 50 days and gives you a line. So as you can see, the line's been moving up, and it has actually recently crossed above the 200-day, which hasn't happened in months. Here at these highs, after the sell-off, as you see, the 50-day moved below the 200. Both the 50 and the 200 were moving down. And now we're seeing this little cross here, which hasn't happened in a while. A lot of people call this I believe it's the golden cross or something like that. Like I said, don't put a whole lot of weight into that, but it is a supportive fact that the price is moving up. Will it continue to move up? We don't know. Are the conditions ripe for it to continue moving up? They're looking good. It's looking very, very interesting. And you can also see the volume increasing. As the price has been moving down, the volume hasn't been increasing. These are both sellers and buyers, but all through here you can see a lot of volume, buying, a lot of green days, a lot of follow-through days. If anybody is a follower of O'Neill, which I am, O'Neill was a genius, and if you just follow his rules, you can make money. But a lot of the greatest investors of all time follow his rules. People who win those yearly investing competitions, etc. Rules are valid. That style of investing is definitely valid. So as you can see, a lot of green right here. Let me move in a little bit. We're seeing a lot of green through here. Buying. And here are the past 4 days. And you can see this very big follow-through day. Would have been nice to had even more volume, but the day before we had a lot of volume. But this is very nice. And as you can see, the 50-day is moving above the 200, which is nice, which hasn't, like I said, hasn't happened in quite a while, months. And at the lowest point, this thing was down, I believe, is it 45%, something like that. Really down, really gotten crushed. Actually, I believe overall it's more than that. So that's the other thing about these leveraged ETFs. You have to be very careful. It's not something you can just buy and hold. You have to buy it for a reason, and you're holding it for the leverage. You're not buying it just to sit on it at any time. It definitely has to be timing involved. You definitely wouldn't want to bought it up here. You would have got crushed, just destroyed. So the reason we're looking at this right now is because potentially we are at a bottom, we are at a low. A ton of analysts out there are saying the bottom is in semiconductors. And if we get a rebound on semiconductors later this year, actually we're already getting a rebound. I've been buying this since a little bit past October, and my position is already up 30%, which is a fantastic return. Just a few months of holding, I'm already up 30%, and I'm going to continue to hold that position, and I'm still adding to it. I've been slowly adding to it. I've definitely started increasing my ads over the last couple months, big time. So, and I will still continue. I'll continue to add as it gets stronger. But that's a fantastic return already. Now, speaking of returns, this is something you don't want to. At this point, holding this would make sense. You would if I'm buying here, I believe I got some at $12 a share, $13 a share, etc. Let's say it never goes back down there. Let's say it just continues to slowly move up, even if it doesn't get to the previous highs. Let's say it gets to $30 a share or $40 a share or something like that. That's a fantastic return. Doubling, tripling, quadrupling your money. Not something for the faint of heart that can't handle a little volatility. If this thing goes down again, let's say it goes back down to the $12, $10 range, I'm going to buy more myself. Is that right for everybody? Definitely not. Definitely not. If you're not able to handle volatility, if you're not able to watch your account bounce around, this is not for you 100%. This is for somebody who wants to enter a position, make a lot of money, but be able to handle some pretty extreme swings. So it's not for everybody, that's for sure. Let's see here. Let's just talk about what this is. Direxion puts it out. They seek the daily investment results before fees and expenses of 300% of the performance of the ICE Semiconductor Index. Okay, so if the ICE Semiconductor Index moves 1%, this moves 3%. If it moves 3%, this moves 9%. The other day, it moved. SOXL was up 12%. That last big bar there. So my position gained 12% in one day, which anybody who knows much about investing, that's an insane return on just for a daily insane return. So let's see here. Some strategies and benefits, okay? Magnify your short-term perspective with daily 3 times leverage. This is good if it's going up, but if it's going down, you have a thing called volatility drag. So it goes down 3%. You can look this up. It's something called volatility drag. This is why a lot of people say these things are not good to have or trade, which is completely understandable. If you don't know what you're doing with this, definitely don't mess with it. 100% don't mess with it unless you're very, very confident and you've researched it and are willing to deal with the volatility and are willing to accept the risks that go along with a position like this. Let's see. Something about target index, the performance, etc. So if you want to get some more research on this, just go to the Direxion.com website, do some more research on it, see if it's something that might be right for you. So another thing that supports this idea moving forward is this is just a basic screener on Schwab. Okay, what I did is I selected every fund type ETF. So we did not leveraged or inverse, leveraged. We did ETFs and ETNs, so I wanted to cover everything. Okay. Then I did fund performance 10 years. So basically wanted to see, how all these funds performed over the past 10 years. So the number one returning fund, even after this crushing turn here, just devastating. You wouldn't want to have been holding this. This is not something you buy and hold. You would not want to have held this through here. You would have got destroyed. Still, if you had bought this 10 years ago, you would have beat every single other ETF in existence that I'm aware of on, just basic screen. I'm sure there's probably some weird thing out there somebody's going to mention that I don't know about or something. I'm not aware of any, but 37.51% return over the past 10 years, total return for this ETF, even after this has happened. Okay, so if you had bought this 10 years ago, let's go back. So 2013. Let's go back here. Way, can't even get back there. Way back here. So if you would have bought this way back here and just held it, even after this downturn, okay, you still would be up 37%. Let's see here. Go back. I don't know why it's. There we go. Okay. So get it a little bit here. So yeah, historically, buying and holding this, if you can handle the volatility, is definitely not a bad idea because even after all that volatility, you're still way ahead of the game, above everyone. So you can look down here. Here's ProShares Ultra S&P 500, which is a leveraged for the S&P 500. But if you look at, I was looking down trying to find like the NASDAQ. Here's the NASDAQ over the past 10 years, around 17%. So you've almost doubled the return, of the NASDAQ just by holding SOXL for over the same time period. And, where's the S&P 500? It's way further down here. Let's see. Trying to find one. Probably around 12%, I would believe. Let's see. That's the growth. As you can see, it has really, done extremely well, even with the volatility. So that being said, many analysts, if you go out and do some research, tons of analysts have already, said the bottom's in, probably around here. This may have been the bottom here. Do I know for sure? No, I don't. But this exhaustion day right here may have been the bottom. If it was the bottom, is buying from here going forward a good idea? Definitely. You can definitely make a ton of money. I have been buying personally here. So 50 days crossing above the 200. We've got tons of volume. All these analysts are saying the bottom's in. The semiconductor market analysts, there's cycles to these semiconductors. And if you do some research on that, you'll see just tons of articles saying, semiconductor, the bottom is possibly in. If it comes back down to 12, 10, I will be happy. I will buy a whole lot more. If are semiconductors gonna not be necessary in the future? Extremely doubtful. So unless you believe semiconductors are, going away next year and not going to be needed, yes, there are some things on the horizon. I believe quantum computing, or there's some other things, but is that stuff solid yet? No. So if we do need semiconductors, if the tech market comes back, the NASDAQ comes back, we could see huge returns with this ETF. Is it something for your average investor who's not able to handle the volatility and just hold in a portfolio? Absolutely not. I would definitely not be messing with this. Is it a trade that you could time right here and make a ton of money? Very probable. There's a high possibility. I would say you need to do your own due diligence. You need to do your own research. I'm just putting this out here just to give some people some ideas. I'm not your investment advisor. I'm not giving you investment advice. This is just a theory, just a thesis, an idea for you to look at. Do I own this position myself? Definitely I do. Will I be adding to this position? For sure. Yeah, I just wanted to get this out there just because it just seems like such an excellent timing idea. And I did want to mention another idea that you might look at is just buying but you could buy semiconductors. I can't remember the ticker. You could buy the semiconductor index that's not leveraged. You could also do that. That would be another idea that you could do. Or you could even buy the NASDAQ, and which is the triple Q is a very, very good idea to just buy and not think about it. All right, well, let me know if you have any questions below, and I'll try to answer them if I can. And hope you guys have a great day. Thanks.